What is up, guys? It is Thursday, September 12th. So I took a couple of trades today across all of my accounts. I took 3 trades actually. So I took this long right here, this long within that bigger long, and I took this short here at the end of the day. So I'm going to go through each one of them and why I took each trade. So starting out on the 4-hour time frame, we are crazy bullish ever since yesterday with that crazy run up that we had. It just looks like price wants to continue reaching for higher prices. And so my draw on liquidity are these relative equal highs that we have right here. They are just way too clean to leave behind. And I remember trading it during this week. I kept wanting to hit the previous high, but we never got that. So regardless, now we are looking like we're going to go and tap into that. And so also with today's action, we have a 4-hour close above this. So I am still very bullish for tomorrow. I do think we're going to try to come up into this area, if not actually hit it. But yeah, bullish on the day. We had a 4-hour fair value gap right here that in the morning was untapped. So I was expecting for price to tap into it at the open and then move on up. And then the 10 o'clock candle has the distribution to move on up for the day. Looking down at the 1-hour time frame, we had the same instance. We had a fair value gap right there, tap into it, and I was looking to go long for the morning. If I was going to end up tackling some kind of a short, I wanted to see a 15-minute candle close below that low right over here. See this 15-minute fair value gap? We had yet to tap into it, so I also believe that that needed to get mitigated at some point. And if we ended up getting a 15-minute candle close below, that was my invalidation point for the day, that we're not going to go on higher. We're actually going to go lower. So after that close, I would have looked for a short somehow, targeting this low here, even this low here. But as you can see, we didn't get that. And staying on the higher time frame, you would have saved yourself all this noise that happened in the morning. It was a crazy morning indeed. So now that we came in with that higher time frame bias, we wanted price to dip down into that 1-hour fair value gap. So at the open, what do we end up getting? We get a little bit of consolidation here in the pre-market, and then price moves, taps into it. Now we know that the trading model that I use is that when it does the manipulation into a higher time frame fair value gap or inverse fair value gap, whatever the point of interest is that I'm looking at, and then we get an inverse fair value gap created out of that, I usually take it when that happens. But the only missing piece here was the fact that we were still in the manipulation cycle. And we do not take trades in the manipulation cycle, or even if it happens before 50% of it. Okay, somewhere after, okay, maybe I'll take it, but I have been getting slammed lately doing that. So I waited. I said, you know what, I'm just going to wait. And I'm glad that I did, because as you can see, price would have stopped me out. Now we got a secondary dip into it, and then also another inverse fair value gap. So I did take a long, I think it was here, on one of my accounts. On my Top Step eval, I took it a little bit higher. I was a little late to the entry on that one. But regardless, we're still in. We're looking for us to go higher. And then I also noticed a 1-minute fair value gap that was created down here. Let me actually put that so we can mark it out together. Right over here. Okay. Price comes down, retraces into it, bounces off of it, taking out this high. Comes back down one more time, taking out that low, retraces back into that 1-minute fair value gap. And I'm not going to lie, I was a little nervous. We were still in the red. But we kept looking at the higher time frame. Keeping an eye on that higher time frame is key, because you'll see, look at these 15-minute candles here at the open. Here, this one was the entry. Look at this. Wick. Those wicks should not be scaring you. We know that wicks do the damage. The bodies tell the story. What are the bodies doing? They're even staying above this level here pretty much, hovering in this area, consolidating. And so if we just remain focused on what is our higher time frame narrative, we are looking for higher prices. These drops or being within red should not scare you. Always monitor it on the higher time frame, and then just wait. Be patient. If you get stopped out, then revert back looking at the higher time frame. Maybe it was just a stop hunt. Maybe. And overall, you're still right. Wait for another A plus setup to form. And there were plenty of other ones too. So, as you can see, price moved on up. I said if we had a 1 minute close above here, we rock it. We got that 1 minute close there. Next candle does what? Huge displacement up, displacement, little consolidation, another displacement move, consolidation, and here we go. I took profit on the majority of my position at this high of day, at the data high. Why? Because you need to target low-hanging fruit. If you're holding out to try to hit the total draw on liquidity on your full position, what are you going to do when it stops you out? What if it does stop you out and you missed out on having like $600 in profit? You got to take your profit targets here, okay? At old highs and lows, especially data highs. That's also a very good place to target. So I targeted that. I could have also targeted the London highs. That was another good point of interest. So once it did that, I put my stop to break even. Now, as you can see on my Top Step account, I did get stopped out. But if you were to follow the way the model works, your stop would have been down here at 19,232, which it was on one of my accounts, on my Apex account, my funded account. And I, unfortunately, by accident, closed it out right here, literally right before this run up, okay? Which sucked. I was so angry, but I decided not to get back in because, well, I was angry and I didn't want to trade emotional like that. I was still up very nice for the day. I hit my daily target that I usually try to get to, but and look at these crazy moves. I can tell you right now, so many people were lost as to what is price doing in here. Oh, we're gonna drop. I can't even count how many traders I saw online saying to go short here, that we were gonna drop. Confirmed. There's a 4-hour fair value gap up top. We're gonna drop. If you're so tunnel visioned on the lower time frames, yeah, this is gonna look like a good area to reverse. But does the 4-hour point that? Does it look like it wants to do that? Especially because we're displacing above this high. We're already in premium. Why are we not rejecting off of this fair value gap with displacement, invalidating this 4-hour fair value gap here? Why are we not doing that? And we're actually moving on up. It doesn't make sense. Why would it finally want to reverse here? No. Okay? You have to always keep in mind the higher time frame. How is price acting here? Now, for those of you who trade market maker sell and buy models, this is the sell side of the curve. Now we're on the buy side of the curve, and turbulence is these relatively equal highs. The draw on liquidity. No reason to go short in that instance, targeting that it's going to drop like crazy. Every single trader that's telling you that the market's going to crash right now is getting cooked. I'll tell you that 100%, because they're not keeping in mind the price action on the higher time frame. Okay, so always focus on that. Always. All right. So within this chop, I was watching my runner still. Did this drop scare me? No. Did this drop scare me? No. I actually took a second trade there. Let me delete that so it just is cleaner. But I actually took another trade in here. So as you can see, we created this 1 minute bearish fair value gap right there. I entered in at the close of this candle right here. This candle that I'm highlighting there. I'm moving my cursor because this is in the way. But this candle right here, stopped below this low. And then once it moved on up here, and the reason why I took this one is if you go to the 15-minute time frame, we have displacement on up on the 15-minute time frame. We also have a bullish fair value gap created right there. Let's make that a different color. Let's make it orange. Okay. What do we get? A retracement? And it starts to come down. Is this a market structure shift? No. Wicks do the damage, bodies tell the story. This was a liquidity grab. All right. And then what ends up happening? inverse fair value gap. There's the model. Now I know this is within this second quarter of this 90-minute cycle, okay? Totally valid to say that. Totally valid. But I was looking at it in the sense of this is Q4 for the AM session, so I was okay taking a trade within here. Now, what ends up happening is price moves on up from here to here. That was 500 ticks. That was one contract on MNQ. That's $250. $250 a day. That's like about $750 a week, I think. If my math is no, not even. What am I saying? $250 a day. That's $1,250 a week. And that's only trading one contract. Dips into a higher time frame fair value gap, takes out liquidity, inverse fair value gap, close above it, market order in, take profits at low hanging fruit right there. Okay. Take some profit off there, put your stops to break even, you get stopped out. Now in this trade, I got stopped out at break even. Okay. I put my stop to break even once it displaced above these highs. Why? Well, we're still in the manipulation. We have a run above an old high. I had a chance of this coming back down, and it did, right? It did. So after that, I wasn't at the computer anymore. I wasn't looking at any more trades. I was actually working now, and I was in a meeting, and I accidentally closed it here because I had it up on my computer screen, and I was going to move the window, and I clicked the sell button on the position, and I have automatic order placement. I don't have it ask me, do you really want to do it? No, I just went through, so that sucked. So yeah, end of the day, now we're here, hanging out here. Why did I take this trade? It's a great question. So I was actually initially looking for a trade to continue going long and actually try to hit the draw on liquidity that was all the way up here. Now that was a stretch, but I wanted to grab some of it. I think it was probably going to move. You know, that was my thinking. So on the 5-minute time frame, same thing. 5-minute fair value gap. I noticed here on this 5-minute fair value gap, we came, tapped it, created another one, and we're tapping within it. So I said, okay, you know what? I'm going to look for a long entry of some sort here in Q3. Okay. We got this big displacement candle down. We got a close above it. So I market ordered in here, put my stop below this low. Price started to chop around, hanging around in this area. I didn't like that it was stalling. Okay. Then what did I do? I marked out this 1-minute fair value gap, and I said, if we get a close below this 1-minute fair value gap, I'm going to reverse my position, and I'm going to try to target a 1 to 2 at least. So we get that candle close, and I quickly switched my position there, put my stop above this high, because now I figured, all right, we're not trying to move on higher. We're going to come back and try to fill in some imbalances that we may have. And what does price end up doing? Coming down here, taking out that low. I believe on the 5-minute, there must have been another fair value gap for sure. Yeah. Look at this slow price action here. We got some fair value gaps, nothing crazy. And it comes to fill in this imbalance here. And I even believe that that is down into equilibrium. Look at that. From this low to that high, price retraces down into the OTE zone of 0.618. Taps it, bounces off of that. Coincidence? No. The concepts all work. Okay, I don't use all of them, but they all work for sure. So my profit target that I had was trying to target this low. Now, this was just to be able to make back this loss and come back into some profit as well. And so when I got down here, I closed out my full position. I said, all right, that's it. I'm done for the day. But like I said, right, I tapped into this 5-minute fair value gap, but with that failure swing high right there, that close here, or sorry, this one, and then failing to continue displacing up, and then we start to invalidate this one, we're not bullish. We are not bullish, ladies and gentlemen. We are bearish for a little bit. In the grand scheme of it, it was just a retracement, okay? You can't go short here expecting a huge sell-off at the end of the day. Sometimes that happens, but it all depends on the context and narrative of the higher time frame. So I knew here that I was just going to be trading a retracement, and it came out to be a nice 1 to 2.4 risk to reward. Solid day, solid trade. So those were the trades that I took today. That's how you can be kind of fluid in the market. And just to reiterate one more time, those crazy drops that we had at the open, or sorry, right here, look at the 15-minute time frame. Let me remove this. If you really look at it, the price action is pretty clean. Pretty clean. We've got this low, we've got a high, higher low, higher high, sweep of that low to then create a higher high, another retracement, higher low. Next potential move is back on up. Okay? Simple as that. It doesn't have to be complicated. It does not. When you're in a position, look at the higher time frame. Make sure that it's still bullish. It's still fitting that narrative. If it's not, then you can reconsider what you're doing. So yeah, like I said, I hope you guys ended up green. I hope this video was very insightful and helpful to you guys, and I will catch you all tomorrow. Peace.